All right, if we're done with the crap, let's go ahead and get back to work. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTII technicals, raw price action, and statistical thread of analysis on this Hump Day Wednesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, so guys, yes, I got a huge amount of supporters behind me, right? So thank you all so much for staying positive here with ARCa, right? So thank you everybody for your support. Just know that I'm actually going to be presenting to you some new, well, not new, just new to you, right? I used to use this a lot on Twitter, but not everybody could understand it, but it's something that I typically use, and I'm going to be showing the GTII community and maybe other tickers as well more of the tools that I use in my strategies, okay? So this is the DMI indicator. It's a directional moving index, and what this dotted white line represents is actually the trend, okay? So when we're ever at a, let's see, so if we're ever above 25% of the ADX, this is called an ADX. Okay, so that's a trend indicator. Okay, so whenever we're above 25%, that ADX indicator, there is a strong trend, whether it's the downside or the upside. Okay, so the reason you have the red line and the green line, it signals you what is the favor in the current moment, right? So right now, of course, it is the bears in favor, but as you can see here, that it's not continuing on an upside. It's in fact starting the curve, right? And so is the green one. So we're starting to get this corrective move. I understand that we got actually some bad news regarding the extension of the Alpine Brokers thing, right, to July 3rd, I think it was. But it's just important for us to look at real time data like this, right? So what I wanted to point out actually was the fact that the trend indicator, the ADX, is starting to pivot as well. It's losing its low trend read, right? So it's actually going to increase in trend, and it's really interesting since the bears are losing this strength here. Right, so that's a pretty good signal that something may be in line, right? So if it is kind of rhyming with something that I spoke about before, then yeah, it could potentially be the target that I was talking about 130 just yesterday, right? We got 135 today, but I mean, to be honest with you, with this price action, I still see some downside coming in. So, in fact, I actually dove in a little bit deeper and gave you and put out right here a tighter area for support, right? So it would be 121 to about 130. This is essentially that area of support and the historical chop zone, right? So very likely we can see some type of bounce from this area, right? So I'm saying bounce. We're going to need to see what the price action does following this bounce here, right? So but what I can say is that invalidating this support line would be a closure of a minimum, I would say, daily candle below the area of about 121, which would then signal a continuation to the downside, right? But that downside, I don't see it quite yet, unless the sentiment or unless psychology really takes it there, right? But if we're looking at a really large time frame, like a 3-month time frame, then failure of that 121 that I'm telling you could, over the next few weeks, take us all the way back down to around 74 cents. But I'm just telling you based on this triangle breakout, right? It's still in that validation process. It has done several validations thus far, so which leads me to believe that it's not the case that we would go down to 73. In fact, I don't even think we have the liquidity to reach down to those levels at all. So it's a little out of the question to talk about this, but I'm giving it to you in a macro perspective just in case it were to happen. But if it does signal that, then I would obviously be kind of on top of that, right? So I just want to be as clear as I can be with what I'm looking at here. Okay, so now moving on to a shorter time frame. This is the 5-day statistical volatility versus momentum backtest that I actually performed, which had a 100% hit rate, right? I mean, unfortunately, it actually reached, let's see, so it actually did 159% of the 182% upside that we actually took note of, right? So this was a 7-year back test of volatility versus momentum, on the 5-day chart. So these are all the samples here. The data set came back, and this was the upside that we were looking for, right? So it wasn't actually, wow, it was 162. So we actually did fulfill that pretty directly. In fact, the price action went a little beyond that. Or actually, it went just a little under that. We wanted that 185, right? But the adjustment came out to 162, of which looks like 159, 160, yeah, 160%. The move was already fulfilled, is what I'm trying to say. So it was fulfilled almost directly to that top. And then it came to retrace to try it again, of which it only did about 117.89% of that move. So very curious for the conditions to be reset yet again from this area here, right, to all the way to this point here. So not bad at all for the accuracy on this. So now that gives us 5 of 5 iterations, of which were guessed 100% of the time, right? So we'll keep an eye on the potentials of another 5-day setup, but this is already kind of closed and it has been fulfilled, so we can kind of leave this one behind. Now, furthering the analysis on the 5-day, please go ahead and notice right down here that the ADX is actually losing trend, right? So this is at about 18.94%, so you can already see how low that is. What's curious is that we have a sharp incline of bear activity with no trend, right? So that kind of is an indication of not likely, the strength is favoring the bears, right? So it's just it's declining trend with bears going up, so it's likely not going to be forever. That's essentially what it's saying. Okay, so let me see what else I can touch on here for you. Okay, so again here on the weekly chart of the target that I was looking at, the range down here, the 121 to 130, right? So I want you to also notice here too that we're starting to get that downtick in the ADX, and also we're starting to get that uptick in bear strength, right? So you can actually see that, yes, there is bear strength, but as the bulls are coming in, as the bears are coming in, the trend is kind of losing. So that's it shows again that it's potentially not gonna be the case forever. Just similar to something like this right here, right? So it continues to the downside, bears continue to the upside, but declining trend, it kind of made us move to the upside. And this move here from this pivot point to this pivot point was pretty large, actually. So that was about a move of, let's see, that was about an 80% move to the upside based on the downtrend and the incoming strength in the bears. So it's happening again, right? So that's kind of indicative of finding a support soon. Okay, so just to give you guys some more tools as to how I use the statistical backtests, right? Because the ADX and the DMI is actually something that I do include in my strategies, and something that I do include in my algorithms as well. Okay, for trading. All right, so now let's look at the last part of the analysis here. It's going to be the RSI, right? So the RSI is still indicative of a downside here, although opposed to yesterday when we looked at the RSI at the very end of the session, we can actually see that there is now a loss of bear strength happening in that 6-hour, right? So let's dive back down to the 4-hour, see if that's the case. 4-hour, similar situation here. Let's see what the bi-hourly has to say. Come on. There you go. Bi-hourly, of course, losing that downside as well. In fact, getting very close to that 14-day simple moving average. Now, while we still have the downside very much losing strength in the shorter time frames, the upper time frames are still at a nosedive. In fact, the 12-hour is still suggesting a downside and very much in the gravitational zone of the bear strength percentile. Okay, so I'm sorry, excuse me. It's a similar situation here on the bi-daily as well. It's approaching that gravitational zone, but I do have to express, or I do have to point out that pivot right here, right? So that's it's indicative of it being temporary, right? So same thing here on the 3-day, that pivot starting to happen, and of course the 5-day would be essentially waiting for the influence from the shorter time frames. Okay, so yeah, just to put it out very clear to you guys, I'm still expecting that target of about 130 to 121 before we can actually find a type of bounce there. Okay, upon this bounce, then we would actually have to see what the price action will do afterward, right? So we'll continue on the analysis. Now, for those of you funny guys out there who are saying that, oh, you're not saying that your high targets are gone. Your high targets are gone. No, they're not. In fact, they have not been invalidated just yet whatsoever, you guys. So if you are looking at this 3-day volatility versus momentum backtest, which is actually this one, I did perform the entire backtest throughout the entire trading history of the asset, right? So here's your freaking online course, right, on statistics, you freaking morons. Oh my goodness, dude, so stupid. All right, so yeah, it's funny that I developed the algorithms, right? And it's and still I'm being told to go to school for it. Cool. Yeah, cool. Tell the guy who makes it. Oh man, you're a fucking joker, man. So anyway, man. Anyway, so yeah, there's a high likelihood that we can actually fail our regression here, right? So but still, we still have some downside to go, but nonetheless, 14-day simple moving average still within the bullish strength percentile, right, or the bullish control zone. So as long as we actually maintain ourselves with an upside pivot beyond this point of 2%, the favor is still with the bulls, and I'm talking about a 3-day iteration here. So this is kind of leaning more towards the medium-term time frame to larger-term time frame. Okay, as you know, that 3-day iterations actually do take some time to kind of fulfill. Just to give you an idea of this little portion here, how about this to this right here? Okay, so just to give you an idea as to how long that can actually take. That's 61 days just on that little thing there, right? So, yeah, so, I mean, we would actually, in fact, have to practice a lot of patience within this, right? And actually stop being a dumbass and start learning something, right? So please, 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 if you do not know what I am talking about or are not curious to understand actual trading, like from really, I'm talking about institutional trading, yeah, get out. So, yeah, but if you guys actually do have an interest in learning how physics plays into, and statistics, how they play into the price action, then go ahead and continue listening here. In fact, I'm very grateful for you. Please remember, I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay, I need you to do your own due diligence. Everything will be cool. All right, you guys, but with that said, I wish you well, a very good night. Fuck the morons, and I'll catch you at the bell mañana. Adios.